So, I was thinking about this. Crypto. Everybody's talking about it. Everybody wants to get rich. And some people actually are getting richer than others. But what's the use case? You got meme coins and people are basically saying that's gambling, and they're not necessarily wrong. But what about crypto that you can use in a real world fashion? Maybe you want to invest in something that makes sense, like a golf course. Or maybe you're looking at Tesla, and Tesla's building all of these major entities all over the place because they need so much energy. Well, if you're the regular guy, you're thinking to yourself, there's no way in the world I'll ever be able to participate in that. Well, you might just be surprised. I got a special guest, so let's just talk about it. So Mantra, a company you probably have never heard of, well, I'd advise you to Google it after you watch the interview, of course. It's a leader in merging traditional finance with decentralized finance, operates as a layer 1 blockchain with over 3 billion in committed tokenized real world assets. Now, if you recall, I stated if you're the regular guy, then you might have an opportunity to participate, invest in things that you typically wouldn't have at your avail because you simply just don't have the capital. Well, Stephen Peepels, Mantra's general counsel and chief legal officer, brings 25 years of corporate and regulatory experience, including at top international law firms and the SEC. He's a Pittsburgh native, so he's not too far from us here in Washington, D.C., and he ensures Mantra's regulatory compliance through U.S.-centric frameworks and champions U.S. leadership in tokenization, which, by the way, I got to tell you guys, and I've talked about this on the platform before, is important. Look at what the Chinese are doing if you don't believe me. He's aligning Mantra's growth with Trump-era business-friendly policies, and as you guys know, Donald Trump loves crypto. Look at his own token. Stephen, welcome to the program.
Thanks for having me on.
All right, so Stephen, this is interesting to me about Mantra. If I'm a regular investor, everybody's familiar with crypto. Maybe they know a little bit, maybe they know a lot. But they look at it and most people say, well, this isn't something that's really tangible to me, for my family. I want you to talk about how Mantra is a big game changer for the regular guy.
Yeah, I think it is. At least it's our goal to be. And the reason why that's the case is that we have a very particular use case that we developed Mantra to do. So we built our own layer 1 blockchain, which means a foundational blockchain. It's not built on somebody else's protocol. It's our own blockchain. And the focus of the blockchain is tokenizing what's been referred to as real world assets. And what we mean by that is specifically large assets that are traditionally financed in a particular kind of way, the participants of which are probably only big institutional banks or lenders. So our goal is to tokenize
And give
those
an
assets.
example of some of those.
Well, one could be like a very new apartment building that's coming up in a neighborhood that's very desirable, but the apartments are expensive. They're over $1 million. But people think that's a good idea. I'd like to be a part of that, but I don't have $1 million to buy an apartment. So a real estate developer, if he wanted to move outside of the traditional bank finance space, might finance it through tokenizing the building and fractionalize it so that an investor could invest $10,000 or $15,000 or $1,000 into the building and benefit from the profitability of the building over time, the price appreciation of the building over time without having to put down $1 million to buy one of the apartments that are in the building.
So effectively, I guess to put this in layman's terms, you are democratizing the ability to invest in large assets for the regular guy.
That's a phrase that we use. We like that phrase.
Which I love, by the way.
But it's also the truth. Yes, like we can open up pools of capital to the development side, and we can open up investment opportunities to the investor side. There's a lot of great investment opportunities that unfortunately tend to be available only to people who can write big checks. Right? So we would like to break that down a little bit and give people who have a $10,000 maybe graduation present from their parents and who want to invest that into something, they can now access pools of opportunity that they didn't have access to before.
Now, okay, so thinking about that, what if, let's say, it's a new parents, right? New parents, they just had their first kid, and grandparents are saying, look, we want to give $15,000 to go towards a life insurance policy that they can pull from at 18, whatever the case may be. Would this be an alternative to say, put this $15,000 here and maybe there's a maturation date that you can withdraw that and use it for college or buy a home or whatever the case may be?
Absolutely. I mean, I would never recommend against them investing that in an S&P 500.
Sure, like the performance speaks for itself.
Right, but this would be another opportunity perhaps to invest in something that might have a little bit higher growth potential that historically someone with a $15,000 check just would not have access to. So if you take a big private equity or private credit fund to have that conversation with a major Wall Street institution, they want to know that you've got $1 million in your bank account.
Yeah.
But if they're willing to fractionalize that through tokenization, then maybe they would take a $10,000 check and provide an opportunity to earn those higher returns that those products offer that historically they would never have access to.
So let's unpack that a little bit. So we're here in DC. I can imagine a lot of lawmakers, particularly those who are on the left-leaning side of politics, they would probably say, okay, I understand the concept, I understand the idea, but how do you guarantee protection for the quote-unquote vulnerable investor? We love the idea that you're democratizing this. We love the idea that you're giving everybody the opportunity to sort of play, if you will, at a much higher level. But how do you assure that these larger firms aren't taking advantage of them? Because that's going to be a question that a lot of politicians that you might need to support these efforts might be skeptical about.
So there, I think I rely on what the blockchain is and what it really means. A lot of people have given the blockchain or cryptocurrency market a bad reputation, like it's to be used for money laundering or illicit transactions. In fact, it's closer to the opposite. The blockchain, we often use a word called immutable to describe it, which means that it cannot be altered. Once a transaction record has been put on the blockchain, it can never change. So we think actually the blockchain is the most secure way to record transactions, whether it's in the real estate space, whether it's in the stock market, et cetera. So that's why you see very important investors like Larry Fink from BlackRock saying there's going to be $17 trillion worth of tokenized assets on chain by 2030. The reason for that is its reliability and stability. So, I'm not immune to some of the concerns that have been raised by certain senators and congressmen that it's somehow a Ponzi scheme or a ripoff. We don't think that at all. We think it's closer to the opposite. We think it's the most reliable way, the most easily accessible way, the most transferable way for people to hold asset investment.
So how do you assure, let's go back to your original analogy of the big complex that's going to cost a significant amount of money. You got to typically have $1 million or more to be an investor. How do you assure that the group that's managing that process of building and then also making sure that the investors are getting their returns, however often that's going to be, how do you assure that they set aside a certain percent for the little guy? What's to, I guess, a better way to frame it, what's to incentivize him to do so?
Well, what we hear from major real estate developers or developers of energy plants, clean energy, solar energy plants, is that they're tired of dealing with just the same lenders all the time. So their source of capital is very closely defined by the fact that they need to finance at a very big level. Tokenization provides them with an opportunity to bring financing in from other sources. But what guarantees the reliability is simply the blockchain, and the smart contract that underlies the payments to the investors cannot be altered. Now, we can't eliminate all fraud. And the purpose of blockchain is not to say
the banks can't eliminate all fraud, for the record, by the way.
100%. But what we can say is transactions on the blockchain stay on the blockchain. So if they've committed to something, they can't disappear into a place that never to be found again. What they've done will be on the blockchain, it'll be permanently recorded and it can't be altered.
So a more heightened level of transparency, I would say also, right?
100% a heightened level of transparency.
So in thinking about that, as you guys, you're currently based in Hong Kong.
We have operations in Hong Kong and Dubai, and we would love to have operations in the United States.
And why those two locations? How are things going there in terms of business, but also the politics? Because again, you're in DC, and we're going to get into that shortly. What have been some of the learning lessons in both of those places? Two dynamically different places in terms of culture, politics, and business. And so I'm curious to know how you guys have navigated both places in terms of overall growth.
I would say Hong Kong is just serendipitous. We had a bunch of people, like-minded people who are very interested in the space that happen to live in and around Asia. We came together in Hong Kong and began to build a company. Dubai, on the other hand, is much more purposeful. And the reason why we are in Dubai is that we believe in regulation and licensing of cryptocurrency firms. And Mantra's goal has always been to behave in a regulated, licensed manner. And we looked around various countries to see what their licensing was going to be about. And we looked at Europe, we looked at Singapore, we looked at Hong Kong, we looked at the United States. And what we believed about Dubai is that they had a clear vision forward about how to regulate the industry. And we wanted to be known as a blockchain company that is fully licensed and regulated. And Dubai is a forward-thinking regulator. They're very interested in hearing from the industry as a whole. They wanted to come up with a framework of regulation that was understandable and transparent and forward-thinking. So we made the decision to get licensing by Dubai's Virtual Assets Regulatory Authority, and now we are fully licensed and regulated by VARA, and that's the reason why we're in Dubai.
And so, in thinking about regulation, which I think is important to an extent, that's going to be a big deal in the United States. We're still trying to figure that out. What's the balance of having regulation so that you're limiting fraud, that you're limiting the ability of individuals to take advantage of others without stifling growth? Because in my opinion, that's a very, very tricky balance. You want some regulation, but you don't want to over-regulate.
In the cryptocurrency industry, for a long time, any regulation would have been better than none, and what we had was none. We had regulation by enforcement policy adopted by the leader of the SEC, which wasn't helping anybody, and then a vacuum. And in a vacuum, it's very hard to operate. Any rules are better than no rules, because once there's a rule framework set in place, you can try to follow it and move forward, and people can have some faith in it. For a long time, the crypto industry was viewed as the Wild Wild West, a bunch of cowboys just trying to get rich. So we recognized from a very early stage that did not work for us. If we wanted to be a long-term alternative to traditional finance, we had to do it in a regulated, compliant manner. And so that was our goal, to do that. And we have historically avoided U.S. participation. We geo-block users from accessing our website from the United States. And that was simply because there was so much conflicting regulatory actions being taking place in the United States against companies who really did want to comply with U.S. law, but couldn't find a way to do so. So for a long time, we prohibited U.S. persons from accessing our company's activities, right? I'm a U.S. person. The CEO, John Patrick Mullen, is a U.S. person. We're strong supporters of the U.S. We want to be a part of the U.S., but the risk was not worth it. We now think the environment is changing quite significantly. We're very aware of the Genius Act, the Clarity or Market Regulation Act that are being discussed by the houses right now. We think that's going to be a real strong signal to the market that the U.S. does really want to lead the way in regulation, and we're eager to jump into that market.
And so with that in mind, does that mean Mantra is moving its headquarters to the United States? What does that look like operationally in terms of your HQ?
So we would like
because
to do
some
so.
Senators are specifically on the Republican side are going to say, okay, hey, look, if we're going to support you guys, if we're going to do something that may be more favorable to your this sort of new emerging industry where you guys are arguably one of the leaders, we want to know if you're going to be bringing your HQ here. You're going to be hiring folks within the United States to sort of help build out this new sector. What does that look like? Or are you guys saying we just want a U.S. division while maintaining headquarters elsewhere?
I think that we're open to different scenarios by which we re-enter the United States or enter the United States for the first time. I think we'd like to have a major part of our operations be resident here. We think there's a lot of great employees to hire and bring on board who are highly sophisticated, well-trained engineers, coders, people that are very familiar with cryptocurrency. And we want to have a place here. We need to look at tax. We need to make sure that the day one that we come into the United States, we're not stuck with a big tax bill. So we do consider tax policy relatively important, and perhaps a tax holiday would be helpful to us. But we definitely like the idea of either re-domiciling our headquarters to here, or at least having a very important branch that's running our U.S. operations.
And so you mentioned coders. I want to unpack that a bit more. You're from Pittsburgh. It's a city that has had its struggles over the past 25, 30 years. I would argue that the United States is somewhat falling behind, specifically China, as it pertains to advanced coders for the continuation of this type of technology, specifically when you focus on Web3. Would you guys have any interest in wanting to be participants in, let's say, investing in the next generation of coders, of sort of mentoring the next generation of coders? Because I think that could probably be something that win you guys a lot of friends on Congress.
No, absolutely, we're interested in that. In fact, we right now have accelerator or incubator programs where we try to identify other companies with good technology and help them to come along and support them in their early days. So yes, we'd love to do the same for students and new employees into the workforce. We do believe that America has some of the greatest engineers and coders. Like West Coast is filled with a lot of talent, and we do have a hard time identifying talent because we're not in the United States right now. So we believe that being a part of the United States work environment would benefit the workforce at Mantra tremendously. So we would fully support that. A lot of technology companies don't have huge workforces. We would not come into the United States on day one and hire 10,000 people.
No, of course. But it's not even necessary with AI to hire 10,000 people anymore.
That's correct. But people who are able to use AI effectively tend to be located in the United States. So we fully support hiring U.S. workers, and we'd love to be here and be doing that on a regular basis.
And so with that in mind, as you look at OpenAI, you look at Gemini, you look at the growth there. I mean, even Musk with Grok, we'll see what happens with there. I have some skepticism about Grok in terms of its advancements compared to the other two, comparatively speaking. Do you see partnerships with either entities if you guys were to sort of redomicile back in the U.S. or move some operations here?
I think that right now, AI is not a huge part of our current operations, but I think having the technology leaders, whether it's AI or other sectors nearby us, like being a part of that ecosystem would be very good for the company. And,
absolutely.
And it's a goal.
Yeah, no, that makes a lot of sense. Guys, we're going to take a quick break. We're going to come right back. This is fascinating stuff. I mean, you think about this as a regular layperson out there, you're probably thinking this is just something that's far-reaching for me. And then as you heard, I mean, the democratization of this does make this something that is accessible to me, to you. If you're thinking long-term, you're thinking about your grandkids. I'm not saying move away from traditional investments at all. I certainly wouldn't advise that. But this is certainly something I would say you could add to your toolbox as something that's maybe non-traditional, but safe. That's usually not the case when you think of non-traditional investments. We'll be right back after this quick break. We have been silenced for years. Americans are done with that bull crap.
And here, there are no fact checkers. No one's going to censor what I say.
The goal is to bring you the God's honest truth so that you know the truth, not just some story.
Behind the curtain, we had a president who was too tired to stand and too confused to lead.
We have 3 branches of government, but the Democrats would lead you to believe that there's only one, and that's the executive branch, and that he's going to ruin the Constitution, and he's staging a coup. Against who exactly?
My goal is to keep you in the loop and the constant attack on our right to keep and bear arms.
I'm unapologetically a conservative because I believe there are truths bigger than this moment.
For some reason, there are some fat in the black community that believe that certain diets are racist.
When I saw that, I was like, I gotta send this.
What is f***ing pronouns? Why all of a sudden are we so concerned with grammar?
All right, guys, welcome back. And I don't know if you're taking a lot of notes. I mean, I'm like, my mind is running a million miles a second here, thinking about everything you said. I'm fascinated about the use case of this for a number of reasons. Now, you mentioned energy, you mentioned apartments, the golf courses was something you mentioned when you and I were talking. What other use cases could you see if you guys really start moving back some operations to the U.S.?
I think there's a great example that we haven't touched upon yet, and that's data centers. Data centers are driving a lot of aspects of the technological economy in the United States, and they're popping up in different places. And I think that many states would like to say we're a leader in constructing data centers. But for the people that live around those data centers, it's not always the greatest thing. First of all,
like Philadelphia right now with Elon Musk. I don't know if you've been following that news, but that's been something fascinating to watch.
Right. Yeah. So the people that live in the communities nearby the data centers are not always the biggest fans, right? And why is that the case? Well, there's a pretty good reason. They're noisy.
Yep.
They soak up a lot of electricity, so people are worried about that raising their electricity bills. And basically, they take up a lot of room. That doesn't benefit them all. But let's say that you would tokenize the ownership of a data center such that the investors who put the equipment in place own some of it, but so do the local residents. So then you bring the local residents into supporting the data center because they're going to benefit from some of the upside of the data center's revenue generation and profitability. So you can have a little bit of a public-private partnership so that people say, well, I don't really like the looks of the data center, but you know what? I'm making money from it. I'm benefiting from it. It's a good investment for me and my family for the future. So it's a win-win. And I think that's a great example of how tokenization could be really meaningful in the United States.
You know, that reminds me in the early 1920s, 1930s, when we were still in the sort of industrial age, we were building a lot of manufacturing plants in the U.S. And there was a lot of concern about building those plants in sort of poor areas. And one of the workarounds at the time was, well, what if we just hire all the people in the areas and then we just pay them a pretty decent wage? And for the most part, the expectation was that people will be happy if they're making a decent wage, they can take care of their families. And that wasn't indeed the case. Fast forward all the way to the late 80s, early 90s, before we got NAFTA, it really sort of became the beacon by which many Americans saw themselves drive up to the middle class. So although the comparison is disparate, there is a little bit of history that says like, hey, there is a way, a methodology that we
No,
can.
it's a good predecessor case.
Absolutely.
And the reason why it's important to look at tokenization as being a key driver in that is the bottom line is a data center is not going to hire 1,000 local workers. That's not the nature of it, right? But so how can you get the local community to participate? Well, give them a slice of ownership of it through tokenization. Their tokens could represent a thousandth of the ownership of the data center, and then have some dividend contribution and some ownership interest, and then they're committed to having that work out for the community. And I think it makes the owner of the data center happy because they don't have people carrying signs or angry about the noise or whatever. And it's just a win-win situation.
Yeah, but you also make local politicians happy because obviously, one of their first concerns will be, well, how do I protect my local constituency? And I would agree. I think if people feel that there's some buy-in, that they have stake in this new thing that's causing a lot of noise, that's very ugly and brutalist in terms of architecture, which is a horrible design, but that's another conversation.
Right.
I think there would indeed be a welcoming sense of pride,
yes,
if you will. So that's a bit revolutionary in a lot of ways.
No, I think so. I mean, I think that tokenization really does have the ability to feel like a win-win.
Yeah.
That there's not a party that's losing out. Maybe the banks will lose out because some of the financing might go to alternative sources, but banks are pretty much supporting tokenization at this point as well. Most major Wall Street banks have a tokenization part of their, or at least a Web3 part of the institution that's looking at how to capitalize on this. So I think.
But wouldn't you say that, nothing against traditional banks, but traditional banks haven't always been fair to the little guy. And so is it fair to say that if you're the little guy and you're looking for a workaround in terms of initial investments for something that's a bit alternative, would this be considered such a workaround? Because a lot of people don't trust banks.
100%. Listen, we're not looking to pick fights with any big banks.
But this is the reality.
It is the reality this was a driver of the industry to begin with. A lot of what we call OGs in the crypto industry, people who have been with it since 2013, 2016. One of the drivers to push this forward was they didn't want to have to rely on traditional investment platforms in order to have control over their own money, right? They wanted to be able to invest in things that the traditional financial players were not even a part of. So absolutely, that's a driver of the industry as a whole. And it has been since the very beginning.
And so if you're some investor, you're looking at this, and let's say in the next 2 years, this indeed becomes a reality. Can I just pick up my phone, unlock it right now, go to iOS and download an app and put a debit card or a bank account and say, all right, I got $20,000 I want to put into. So how is this going to work operationally?
Yeah. I think there's a couple issues that you've touched upon there that really matter that the cryptocurrency and blockchain industry has to get correct. It has to be user-friendly, and that's been a huge issue so far. You should not have to have a degree from, I'll say, Carnegie Mellon, since I'm from Pittsburgh, or MIT or Caltech or another great technology school in order to be able to use this on a day-to-day basis. And that user interface and making it friendly and interactive with the user, that's a critical thing in the long-term success of the industry. It needs to feel like you're just using your phone the way you would use your phone for any other app.
Yeah.
And candidly, you shouldn't even know what blockchain you're on. We run a blockchain named Mantra Chain, but to interact with our cryptocurrency, we don't want you to even know that. We want it to feel as seamless as your Interactive Brokers or E-Trade account. And all you want to know is that you can execute a trade and it's successful and it's reliable and it's transparent and it's low cost.
Yep.
And the blockchain does do a lot for low cost and also does a lot for 24/7. So we think that 24-hour day access to your securities and the ability to trade them when you want without interacting, without having to know too much about the technology is the key to the success of the industry.
And so are you guys at that point in terms of having an app developed that's that smoothly efficient and effective? So when you guys do come here, presuming you guys do decide to come to the US, I hope you do, you're ready to sort of hit the ground running hard?
I think our mantrachain.io web interface is very, very user-friendly, and it's been designed with that exact goal in mind. And the next step is to build an app on a chain that works just as well as our website does.
iOS and Android.
Exactly.
Wow. Yeah, this is fascinating. So you're in DC. I'm assuming a part of your visit here is to talk to members on both sides about what you guys are doing and what you hope to do in the U.S.?
Yeah, absolutely. We're so excited to see the Genius Act going through. We hope that the Clarity or Market Structure Act manages to coalesce and move forward as well. We think regulations is a wonderful thing. We have a couple goals in being here. We want to get to know the people who are actually writing the legislation. So if there are things about tokenization or Web3 services that they're not experts on, that they can look to us as one of the people to ask questions of. We'd like to have a say at the table. As far as the legislation that's being developed now is coming out, it doesn't have a real strong tokenization focus. So we'd like to maybe have some input into that if the SEC is having a roundtable or if there's some hearings that we could testify at, just to give the perspective of an industry player that is already regulated, it's already licensed, it's operating a business in the way we think the United States would like these companies to operate.
Now, speaking of that, Stephen, if someone watches this interview, a member of Congress, and they're thinking, well, why don't we have any language in there that's strong on tokenization? What would you say to that member?
We'd say,
and also why is it important, by the way?
Well, we think it's important because of the nature of our conversation today suggests that this is going to be a thing that accesses retail investors. This is going to be the kind of thing that's not just for wealthy hedge fund guys sitting in New York City. It's going to affect the broader retail investor market. So getting it right matters. And so what we would say is that we would have a lot to bring to that conversation. Let us submit some comments on the draft legislation, or let's have a conversation about, same way you and I are discussing it right now, what tokenization can do for ordinary people. What are some of the safeguards that VARA, for example, has put in place to protect investors in that part of the world? What have we learned by being regulated in the UAE? What did they get right? What could they maybe have improved on a little bit? Let's be the leader in regulation in the United States. Let's really knock it out of the park, because if the United States doesn't do it, someone else will.
Someone else will, maybe the Chinese. So when you think about getting it right, give me the top 1, 2, and 3 in the right order of what getting it right looks like.
I don't know if I can necessarily pick 3 different things. One thing that's for sure is that the traditional securities laws that were written in 1933, 1934, and 1940, before there was anything called a computer, are probably not the right way to regulate the industry going forward. So what we believe is that let's think about how to regulate it, recognizing the way the world works today. Let's not try to put a round peg into a square hole, right? So that's one of the most important things. And I think another important thing is let's be thoughtful about this. Don't accidentally set up roadblocks in the legislation because you failed to consider the way the real world works. Let's get some industry players that are actually doing this on a day-to-day basis to put some effort into it together with the legislators, right? The legislative process is complex, it's nuanced, but getting industry participation into that process we think is absolutely critical. And then let's have a system that benefits everybody, like not just the big wealthy Wall Street investors, not just the developers of major real estate developments, but also the retail investors. Let's have a playing field that seems to make everybody happy.
And so really quickly before we wrap, have you had some members skeptical as you've sort of explained what you guys are doing, what you hope to accomplish?
So we've been meeting with a lot of the legislative aides and congressmen and senators who are pretty psyched about the movement forward in crypto in the United States, that they believe that crypto is here to stay, blockchain is here to stay, so let's really get this right and let's lead. So we have not been met with too much skepticism. We are aware of skepticism, both among certain individuals.
Even among the broader population, there is some skepticism.
That's right, and there should be. And that's not a bad thing, because we need people to be skeptical to make sure we get it right. But for the most part, it seems like the momentum is pretty positive right now uniformly. And we always have this expression, the devil's in the details, or maybe the Holy Ghost is in the details. But getting the details right is our goal. And it's a work in progress. And the very first bit of legislation that hopefully comes out this year is not going to be perfect. I wouldn't expect it to be.
Of course not.
But as long as it's clear and people can try to comply with it, then we can make it better as we get on the road.
And so for the retail investor out there who will be your customers maybe in a year or two, maybe they have some experience with crypto. Maybe it's like, I got a little, something with Ethereum or something Bitcoin, or maybe I got some meme coin that my son told me about, or whatever the case may be. And I don't really see a use case for this stuff, or, it hasn't panned out well. What do you say to that person, one? And then two, what do you say to the person who isn't thinking about this, but you're clearly making the case that this is coming, this is the future, get prepared for what's to come? What do you say to those two individuals?
I think that in terms of the people who are, know about meme coins, who are just sort of speculating the market, I mean, do that and have a good time with it. Just don't risk your house, don't make it like a gambling problem. Like, why not explore and learn? But what I do think is that the cryptocurrency companies that are going to be successful as we go forward are the ones that do have a real use case, where people can understand why they're using it rather than just hoping that price go up. There's a goofy saying in the crypto industry, price go up, right? Everybody likes it when they invest in something and the price goes up. But in order to be sustainable, there has to be a real world use case. So there are lending applications, borrowing applications, other applications that people can relate to their traditional financial services that can be more fluid, more accessible, more transparent, more 24/7 on the blockchain than they would ever be with using a retail bank down the street. So I think it's not fully developed yet. I think that it's got a ways to go before we can translate some of the applications that exist in the blockchain today, but really are a bit hard to use. Like I was saying before, as soon as we can convert those into user-friendly interfaces on your iPhone, I think the sky's the limit.
Oh, I think so too. I think you're going to the moon, as they say in,
Yeah.
in the meme coin space. So I was going to wrap it. I got one more question because you mentioned lending. Now, there are pockets of Americans who, whether it's Americans of color or white Americans who may live in Iowa and Ohio, and maybe they're right above or right below the poverty line. Maybe they've had a difficult time accessing credit to get a car, to buy a home, whatever the case may be. How does this benefit that population? We would call them in politics the vulnerable population.
Well, traditionally, it's been difficult for the vulnerable population to access traditional financial products offered by traditional financial institutions. Cryptocurrency could solve that problem. For example, if you were able to have some tokenized assets in your portfolio, it's much easier to take a loan against your tokenized asset than going to a bank and saying, I'd like to pledge my car and borrow $1,000 against my car as security. So one of the goals of the cryptocurrency industry is to make access to financial services and products much more worldwide, so that you don't have to show your credit application. You simply have to say, I own 10 tokens in this data center or this apartment complex or this golf course or this power plant, and now I want to borrow against it. It's very easy to secure your tokens. They sit in a facility that's custodied, and as long as you pay back your loan, then those tokens come back to you. So it can make the process of borrowing and lending much more retail friendly than it's ever been to date.
And with these tokens, and this is just my own curiosity, would they be in sort of a traditional wallet, or where are they held?
Well, investors can hold their tokens in a traditional wallet on a centralized exchange like Coinbase, or on
which I use a lot.
Yeah, or on a cold wallet, etc. And then if they wanted to borrow against them, then they would have to provide custody of those tokens to the lender.
Oh man, that would be great. That would be great.
It should be a more easy and streamlined process than traditional borrowing and lending. And it can be there can be enormous iterations of how this might work. A 10-day loan. Pledge your tokens for 10 days, pay a couple of bills that you weren't prepared for, recover, pay them back, and now your tokens are back to yours without having to go through the whole banking process.
Look, Stephen, I think you guys at Mantra are definitely on to something. A lot of my peers in my age group are fascinated by crypto. And even friends of mine who work on Capitol Hill, when they talk about this with their members who are a lot older, they don't always get it. There is some skepticism about, I don't really know about this. There isn't anything tangible connected to this thing. You can't touch it. You can't hold it. You'll hear that a lot from older people.
There are going to be cryptocurrencies that are always like that. But those are the meme coins, and the other types of cryptocurrency are a little bit different than what we're trying to do.
But that's my point. You guys are doing something that I would argue is a bit revolutionary. I think there's a significant use case for it. And what I like that's I would argue is so promising about this is that you're expanding the opportunity for everyday regular people to be participants in this. And typically in the United States in history of finance, that's never been the case. It's really, really never been the case. And I think in part, not to politicize this, but you see the growing economic divides that's causing a lot of issues within our country. And here comes a mantra saying, well, hey, we want to foster and create an environment where everybody can sort of be participatory in this thing we call commerce and free exchange, thus capitalism. And so I think that's a great thing.
Shermichael, we got to get you on the payroll. I couldn't have said that any better myself. That was well done, my man.
It's a pleasure, man. Guys, Mantra, I highly recommend this. We'll have all the details in the description below. Check it out and follow the news. I mean, I would argue in the next year or two, these guys are going to be big, big players in the U.S., and it might be an opportunity for you as a retail investor to put some money behind something that otherwise would have been unreachable. I know I'm going to be one of the ones. Don't let me be the first one. Don't let me beat you there. I'm Shermichael Singleton. I'll see you next time. Take care. And thanks for watching.